Perfect. Greetings, guys. Let's get straight to what we have to talk about today. So today I'm going to be showing you guys how we were able to catch over about 200 pips on the trade JBP JPY. That's the pound yen. So I'm going to be taking you from step to step gradually and showing you every step of the way and how I was able to catch this trade. First up, you see everything on my screen. I'm going to go ahead right now to remove every single thing that is on the screen. But before I do that, I want you to see um on the WhatsApp community that I shared on, and of course how it was able to go. So quickly you can look at it here. You look at how I was updating the trade, and of course helping them to see every step of the way, the proof that we took the trade and how it went. So let's go straight into the trade and of course analyze how it was done. And of course you should be able to see how we were able to do this so that you can replicate it in your own trading journey and make your trading journey take a whole new turn. Now, let me go ahead and remove all the drawings and then start analyzing from fresh. Okay, so what I was able to do is that first off, I went to the weekly time frame, and on the weekly time frame, it's clear obvious that JPY has been on an uptrend all day long. Okay, JPY has been on an uptrend, and of course, I try to look at where this market is heading to. Where is the market targeting? And of course, I will do that on a monthly time frame. On a monthly time frame, I can see this volume at this level or this distribution area at this level that left behind what imbalances. So what I have to do basically is to go down on the lower time frame and of course start looking from where I can start looking for entries to target these up or higher prices. So with this understanding, I basically would go down to the weekly time frame to look for zones that I can trade from or to take my trade from. Now, when we come down to the weekly time frame, what do I observe at this area? I observe at this area that last week we had a completely bullish week. So what I'll basically do is to map out the low of that week, and of course I will map out the high of that week. Now doing this, I simply know that if the market is to go upward, it has to come down and fill some imbalances that were created by price at this region. There was an imbalance that was created by price at this region. So I would expect the market to come down, fill down this imbalance before pushing up to the upside. So that said, let's go down to the 4-hour time frame to look at how it is definitely. Now on the 4-hour time frame, what can we see? We can basically see that after mapping out our weekly levels for last week, the market traded down into that imbalance I spoke of. Now, where is the imbalance? The imbalance was available at this region. Okay, it was available at this region that was on the weekly time frame. So right now, or on the daily time frame. So right now on the 4-hour time frame, what I'm simply gonna do is to use a strategy that I use in my community that is called the base, the rally, or a continuation pattern that tells us that the market is going to continue going up. All right. Now that pattern simply says that what you're supposed to do, or what you're expecting, is the market is in an uptrend. So you have a rally that will create you a base, of course, and then after that base is created, you want to see an expansion to the upside. And then when market pulls back into this level of demand, you want to be taking prices higher. So this is the strategy we're talking about, and this is the strategy we saw on this trade. So we saw this rally to the upside as at this level. Okay, we saw this rally to the upside as at this level. When this rally occurred, what happened? The market created a base as at this level. After seeing this base, I went ahead quickly to highlight it as my area of interest because we have the rally, we have the base, and of course we should have a rally. And of course, next up, we see another rally to the upside by price. So when this rally came up, the next thing I was able to do was simply to identify the demand zone from the expansion of price, or from the price that broke out from this accumulation or from this rally or this consolidation. But I like to call it an accumulation because we are basically in an uptrend, and of course we expected a continuation in the trend. So when the market came down into my area of interest, that was yesterday, I had to look for entries to take my trade and of course follow it to the upside. So this is the price that broke out the accumulation. The market came back in, ticked to the price. So what I did was simply to go down on the 1-hour time frame and start looking for candlestick confirmation or rejection to tell me that we are about to shift from a downtrend to an uptrend. So this was the 1-hour candle that came into my point of interest. Now, what did I do? I had this level mapped out, and of course, saying that my invalidation or my stop loss was going to come below this level, because putting it right down here makes sense for safety, but it's actually very, very risky. So I actually put my stop loss here, saying that if the market should come down into 50% of this accumulation, I will be looking for some reversal patterns there. But of course, I did not take the trade until after getting a confirmation. Now, on the 1 hour time frame, it was not quite clear, so I had to go down again, down to the 15-minute time frame. So on the 15-minute time frame, what did I see? I basically saw that I had a strong push to the upside after the market came down into this area. Remember, this is my POI that I am currently studying right now to see some confirmations that tells me the market wants to go higher. So after seeing this push that tipped into my zone, what did I do? I basically took my long position from this area. Okay, that was yesterday. I took my long position from this area. My stop loss a little bit lower. That's about 30 pips stop loss that I had on this trade. Now, where were my eyes was basically on the higher time frame perspective that I had seen, which is really, really far up above. Of course, I took the trade and I held it all through the night into the morning. And of course, the market went up and hit my first take profit, which was this previous high, giving me over 100 pips, and I had to secure some profit. Now we had the CPI news that came up, and of course the news came up, and then the dollar was very, very bearish. So what did we see? We had to see a pump in every pair that was JBP, US, or maybe any pair that is quoted with the US dollar. But of course, since this is the yen, and of course JBP was affected as well, we had this spike that spiked up. This is the CPI candle, but of course we are not interested in that because we always know that the fundamentals will come out to fulfill what is currently happening on the technical analysis. So we therefore held our trade with full confidence of the analysis because we had this rally, we had the base, we had this rally. So put back into our demand zone, of course, we should be expecting the buys. So the market pulled up right into this level, and of course, this is where I actually secured my 200 pips on this trade. But of course, I'm out of this market right now, but I know where the market is headed to. The market is headed right above into this weekly level or this monthly level of interest. That will be about 500 pips for those who really want to hold. But for me, since I'm a day trader, I am closing at 200 pips. And of course, I'm expecting to look for other entry. That is if the market should give me one. And that is how we were able to catch over 200 pips from this trade. Next up, what I'm expecting from this market right now is to see the market come back into this zone, and where I'll be looking for the next buy opportunity to still continue holding prices till we get to 180, 100. So that will mean that I've had the next rally here, and then this will be my base, and then this will be my rally. So any entry back into this level should give me a confirmation to hold prices a little bit more higher. So that's basically how I was able to catch over 200 pips trading JPP, JPY to yesterday into today. And of course, this made me to flip an account that I was currently holding. Now, that is to tell you that in Forex, what you actually basically need to make money is just one strategy. You just need one strategy that you can master and be able to spot it in the market and, of course, duplicate it every now and then. When you are able to do that, trust me, you're going to make a lot of money in this market. If you found this video very valuable, make sure to hit that subscribe button, like this video, so that next time when we upload videos into our YouTube channel, you can be there to partake and, of course, benefit from the amazing content that we share here in our community. And of course, if you're also interested to learn how we trade, you can as well sign up using the link that we'll put in the description of this video. And of course, I'll be there to respond to you, to hold your hand, to show you how you can milk this market. You do not need much money to make money in this market. All you need to do is to get the right knowledge. Like I showed you, this account I was trading was a $10 account. Okay, it was a $10 account that I started trading. But of course, we flipped the account. The account started at 6,000. We flipped the account to a total of about 17,000. That is SEFA. In Cameroon, if you're in Cameroon, you know what I mean, talking about SEFA. All right, so we flipped the account up to 17,000. That's almost 3x the accounts we were trading, and this only happened in 2 days. So you can basically learn like this and become profitable. And like I said, all you need to do is to be in the right community, have the right mentor who is going to train you and hold your hand and guide you. And I'm here to do that for you. So make sure you have hit that subscribe button. Make sure you've turned on the notification bell so that when we upload contents like this, you can benefit from it. Thumbs up, guys. See you in the next video. And of course, we will be catching something much more bigger. My eyes are currently right down on AUD USD, where I'm expecting a massive drop to the downside. I'm expecting a massive drop to the downside. But like I said, stay tuned. The next video is going to tell us why I'm expecting a massive drop to the downside and how you can partake. The amount of pips I'm expecting from AUD USD alone is well over about 350 pips drop that I'm expecting from AUD USD. Would you want to see how I'm going to catch this? Make sure you stay tuned to I post our next video. Until then, see you soon. Thumbs up, guys. Peace. Peace, peace, peace. Peace.